Alright, so we're just going to review the ES. Alright, so yesterday we had a big bearish bar, and I explained how this big blue right here was accumulating the low, just rejecting the low, not ready to go down yet. Where? Right there. Today we had followed through on the upside, right? So, but note that the low was taken out. So, when it comes back here where this 3 is, that's where volume picked up and did the breakdown. There's a trouble. So we'll find out how much it can go. So anyway, let's take a look. Okay, so the daily basically went to support. It went lower than support, and now it bounced. So price now I think is 41.46. It went down to 41.14. I'll take a look at the figure charts to see what the longer term targets are. As I explained, I have 4,400 off of the base right here, 4,400, and basically the breakouts speak for themselves. Here I was really here I was not sure what the hell's going on. You see over here, I guess someone sold resistance. At the same time, even if you have a lot of price volume, right, and it's not breaking levels, ask yourself, is it a pullback? Because a lot of price volume, a lot of times what it's doing is coming back to test the support, meaning, the typical breakout and test the breakout. When you test the breakout, there's multiple waves, like A, B, C corrections and all that shit, so that can take up a lot of volume. So you have to be able to distinguish the heavy volume of a change of behavior versus a pullback. So I knew that I didn't know for sure, but I knew that this was the first test of this area. That I knew, so not really worried, especially after this rally that took out the high. So this basically is negated as a change of behavior. Then it starts going sideways and then establish another breakout with the support point here. And all it does is go down to support. It was a pretty big move. It went down a lot, but it gave the support, full test of support. Usually after breakout, you do not get a full test of support. You get 68, you get 50%. If there's a lot of momentum, you get about 38 or 33. But in this case, the dip is pretty low. The volume is 14, biggest in 14 bars. I'm not really worried. However, this is the key line in the sand. So the 41.25, that's a low. So if that gets taken down with high volume, there's a problem. And already we saw that it got pierced, right? But if it gets broken with high volume, that means there's a real issue. And I don't know where it's going to go because it's already tested this, it's already tested everything. So is it going to? I don't know. We'll just see if it's a change of behavior or it's just a test and little dip, like a spring type maneuver to go higher. But right now, I got 4,400 and 43.75 off of this stepping stone count and off the entire base. Does it mean it's going to go there? Nope, not unless you have a change of behavior and all break out to the downside. That's going to be a problem. But as far as I see right here, this one is still very high. Like even when it pulls back to test support, it was high volume and then it got taken out. I get it. Maybe they're going to sell. This is interesting. Look like a double top. See? So from the double top you had high volume. So that makes sense. Those resistance traders were just selling resistance. Anyway, not concerned yet until it breaks. Otherwise, it's still, up to the upside. All right. What about internals on the New York Stock Exchange? This was not really that worrisome because it's about 1,200 stocks going down. If it breaks 1,500, there's an issue. All right, so we'll just see how this 777, which is occurring right now, how it's handled, because after it went 1283, 1,146 stocks went up, and 777 doesn't mean shit. But if it breaks and it's a number that's over 1,500, there's a problem. So this is internals don't really show me that there's a change of behavior. They don't, not clearly. You had some selling, but not a real change of behavior that breaks the trend and all that stuff. All right, so you had a rally, you had a pullback, you had the bounce here, the reaccumulation right here, which protected, someone's protecting these lows. When it dipped, they came in, and it's really a lot of buying right there. And it's going up. So I want to see how it handles in this brick, in this above 4180, right? Already today, the selling pressure is the biggest in 7 bricks. So 1, 2, 3, 4, 5, 6, 7. So since the low, this is the most amount of volume today. That's not a good sign, but it doesn't mean that it's broken. So we'll just have to see. I think the pressure is going to be up here, because that's the test of the breakdown. Increasing volume gives the lesser risk trade than all the way back here. Right? Now some may say this and see up, down, and then up, down, and say, oh, this is an up thrust. You're right, it is. I want to see that on the left, what's on the left. All right? So it's higher. The zone for selling is higher. It's up here. Anyway. Besides that, we had like a mild change of behavior, tap here, and it went up. So that was nice. Over here, biggest in 15, tapped, and just went up. And now, okay, the other thing I wanted to show, I already showed the point figure targets, right? Unless there's a break. If there's a clear break in this 40, what is it, 41.25 gets taken out, especially with another red, it would be red on red, which is selling on selling, which is continuous selling, and there's going to be an issue. But as far as I see right now, it's just break, test, break, test, break, shit in the middle, test, heavy test though, then reaccumulate, break, test. Right. On the lower time frame, we'll just take a look at what trades were there. And before I go any further, I'm going to explain something. So with the Wyckoff trader or any type of trader, right, it's very, very, very important that you have the basic setups, or the basic how to trade setups, right? So in my opinion, there's just really 2 types of trades. There's one is the turning point, and the second is the continuation. That's all. So those only 2. So the turning point type of trade, what are the elements you'll see? You'll almost always see it's either a climax or the shortening of the thrust, right on the left-hand side. And on the right-hand side, you get your change of behavior followed by the low volume pullback, which you could call last point of support or whatever, right? So that's on the right-hand side. So that's on the left-hand side is the climax, SOT, and the right-hand side you have change of behavior, you have the pullback, low volume, small range, low time, whatever, and then it goes into markup. So these trades, they don't, you see, the thing is, these trades don't set up all the time, okay? And a lot of times they set up, but we cannot enter them because you missed the low risk entry or whatever. And these are high reward trades, like very high reward. And if you know what you're doing, you can target the daily time frame and start entering on the lower time frame, right? On the 15-minute and under, with the daily and the 15-minute under, or like the 4-hour and the 15-minute and under, and you could get big reward trades. But the thing is, they don't happen all the time, and if you're watching a few markets, it's not. It will consume a lot of time, and it's a pain in the ass. Right? So, but you have to know how to do this, especially if you're already in a trade and you see the elements of a turning point. You need to know, because I'll give you an example right here. Look, that 33, after the 46 failed, you had all this volume. What happened? Pop! Went down to support. It broke that low, right? Resistance 0.1, resistance 0.2, pop! Lower low break, increasing volume. That means you have a chance of lower prices. Significant. This is the biggest in 33, and this is the biggest in 46. It's stuck, broken, lower low. So obviously you would definitely need to know the turning point and how it occurs and how to trade it and the warning signs, anticipating a turn when you're already in a trade, right? So usually they don't just come out of nowhere. You will see the supply increasing. If you're bullish, you'll see supply increasing, or shortening of thrust, or some overbought condition. So that climax, that left-hand side, will become apparent to you when you see that climax, shortening of thrust, especially going to certain levels, volume, doing its thing, either getting climactic or shrinking significantly. So you need to know that's the first type of trade that you need to know. All right, and that's the trade that sets up the most important thing called the springboard. The springboard. Wyckoff, in his course, said trade springboards. So that's what you trade, springboards. That is the turning point. And anyway, so the second type of trade is the continuation trade. Okay, these are the break and test. All right, the break and test. You could also say they could consider them like the supply and demand zone. I think that's what they call them: supply, demand zone, and supply zone. These are just break and test. Like it's basically buying the pullback. So I don't know what to call it, but it's pullback, trading pullbacks. Okay, this all is pullback trading. Continuation, pullback trading. Remember, when you see a breakout, the breakout is nothing more than a continuation signal. It means that you've left one range and you're going into another. All right, breakout go from one range to another, and they're establishing a new range. So you need to know how to get in on the pullback. When market go into a new range, you need to get in on the low of that range. Right, so that's the pullback. All right, so these are the only two trades. Now, the thing is, it's easier. Obviously, it's much easier said than done, right? So for turning point trading and for pullback trading, you can use bar charts, wave charts, any charts. But what I'm seeing is a significant benefit to incorporating point and figure. Why? Point and figure is notorious for their support and resistance lines of support and resistance. It makes it very easy to see support and resistance lines. That is why it makes it very easy to do counts on support and resistance lines for projections, right? For target projections. So it, the support and resistance lines on point and figure are very, very straightforward. You just look at the lowest X or the highest X and then look sideways, and you'll see the line of X's and O's to show you that. All right, so that's about it. Now, if it shows you support and resistance lines, by extension, what else will it show you? If point figure shows you support and resistance line, by extension, it will easily show you breakouts. Very easy to see. And those breakouts, I know you're thinking, okay, I'll just use a bar chart, but believe me, there's a big difference. You will see a lot of clarity between support and resistance on point figure charts versus bar charts, and where to put your stops. You'll see much more clarity on the point figure chart. In fact, I'll kind of explain in today's action. All right. So over here we had selling off the open. You have selling off the open, you have tap, 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 and then you have this break, right? Then you have this breakdown, and it looks like a breakout, but the market reverses and then breaks out. Anytime you have a breakout, the low before the breakout on a point and figure chart will show you that very clearly, right? It becomes your point of support. All right. So, for example, here where you have the 41 biggest volume price, whatever, and 41 waves, the low before it is where the support would be established. Of course, they went and they tested it, and it looked like a breakout, but then it went the other way. And when it did that, you knew that the market was going higher, not lower, because they already shook out everybody who, So that set up the pullback trade here, which became the new line of support after the breakout. That's a new line of support, right? And then it came back to support. It went up here to resistance, and now it's breaking. So you can see the line of support right here is what I used to project the target right here, which was missed by, this is, I'd say about two boxes. So I projected 12, it went 10. So that's another major benefit of point figure. It can clearly show you cause, then it shows you the target. Then what do? Just buy the pullbacks. If it's showing you the potential target and then starts going in that direction with breakouts, what do you want to do? Buy the pullbacks. Because you have an idea about where the market is going. Then you're just waiting for signals. Those signals are continuation signals. Continuation signals are breakouts, where you get them and then buy pullbacks. So for example here, boom, got the breakout, know the target, buy the pullbacks. Okay. Similarly, if I'm over here and I see all this shit right here, and then bang, breakout right here, I see this base, I have the idea that the target is all the way up there or close to that potential, what do? I have an idea of where the market is going. I have an idea of direction, but not just direction, the actual price in that vicinity. So now the signals will tell me, all right, time to buy pullbacks on its way to the target. So that's what I'm looking for. I'm looking for idea of where it's going, what price, and then just buying pullbacks. Just buying pullbacks until it goes the other way. And then if it comes back, like right here, oh, okay, you want to continue in that direction, buy pullback, boom, buy pullback. All right, until it stops. So if it breaks out again, buy pullbacks. right now, how much cause do we have here? About 9. The effect should be right there. So we'll see how that's handled. I don't know how it's going to be handled, but that has a count and potential to go that low, and it's already there. So we'll see after that what happens, if it reaccumulates and starts breaking out, or if it gives a stepping stone count right here. If it does and it starts breaking down, then getting pullbacks. So that's all. And I think that point figure is a very complete system in that way, because it's telling you the destination and telling you to get on. The destination is determined by the cause and the effect, and the buying pullbacks along the way to that destination, giving you clear evidences, clear signs of, breakout by the pullback, breakout by the pullback. So all the way to the target. So this I'm going to experiment with a little bit more. I saw it clearly work today in gold. I saw it work in ES. So I know it's going to work in crude. So it's just the natural movement of when the market goes from point A to point B. How does it go from point A to point B? We all know that they break, test, break, test, break, test, shake out, then reestablish trend, break, test, break, test, break, test, shake out, reestablish trend, do the same shit over and over again, right? So that's the idea. All right, thank you. Have a good day. Bye.